Hello everyone, welcome to lecture number 36 of BHU SWAYAM course on fundamentals of economics and financial markets. Myself Dr. Anand Singh, and today we will discuss regarding the meaning and features of old stock exchanges in India. Now in this particular video I will be discussing with all of you regarding three important key points. Those key points are: point number 1, what is the definition of a stock exchange? In this particular segment we will discuss regarding how we can define or what is the exact meaning of a stock market. In the second segment, we will discuss regarding the origin and history of stock exchanges in our country. That means we will discuss regarding that how the first stock market was established in our country, what was the platform, how they were established in our country, and what were the prevailing conditions in which they were operating in our country. In the third segment or in the last segment of this particular video, we will discuss regarding the important features of old stock exchanges. Nowadays, we know that there are different kinds of new features of the stock markets. For example, demat trading is permitted, short settlement cycle is there. But what were the important features which were basically concerned with the old stock exchanges? Nowadays, such features are not seen. We will discuss regarding some of the important features which were concerned only with the old stock exchanges. So, let us start this particular video. Now, let us discuss regarding the definition of a stock exchange. Stock exchange is basically a recognized place which provides the platform for the trading of second-hand listed securities. Now, in this particular decision, there are three important key terms which are used. Those are: first one is, it is a recognized place. That means all the stock markets, they are regarded as a recognized place. Let us discuss why. Now, all the stock markets which are basically operating in our country, they are recognized places. That means they are properly recognized by the central government of our country. Now, the central government basically recognized the stock markets as per the provisions of SCRA Act 1956. That means the Securities Contract Regulations Act 1956. That also means in order to work as, or in order to act as, or in order to operate as a stock market in our country, it is compulsory for all the organizations to fulfill the provisions which are stated under SCRA 1956. If the companies will fulfill the provisions which are stated under Securities Contract Regulations Act 1956, then only the central government may grant them permission to act as a recognized stock market in our country. So, it is said that the stock markets are basically a recognized body. Now, they provides a platform for the trading of securities in our country. Now, here the term trading basically means buying and selling of securities. Now, the stock markets, they basically provides a platform where trading is possible. That means if any investor, if any company has to trade in the securities, then it has to come to the stock markets, and the stock markets, they basically provides a platform where the buyers and sellers, or the buyers and the companies, they may interact with each other. Why? Because the companies, they are floating their securities in the market, and at the same time the investors who are willing to purchase those kind of securities, they can interact with such kind of sellers over that particular platform. And here trading is permitted. That means trading basically indicates the buying and selling in those securities. Now, the last important thing which was defined under that particular definition was trading is permitted in second hand or listed securities. Now, why the securities which are traded over stock markets, they are regarded as second hand securities? Because when a company basically offer its securities for the first time, when the securities were fresh, or when the securities were completely new, then those securities are floated by the companies in a market which is known as primary market or new issue market. And when the companies fulfills all the terms and conditions, fulfill all the provisions which are stated for the primary market, one of the important provision is that all the securities which are floated by a company, at least 90% of the securities must be subscribed by the investor. Now, suppose this particular norm is fulfilled. Now, when 90% or more than 90% of the securities of that security is subscribed in the primary market, then only permission may be granted by SEBI and permission may be granted by the stock markets to list or to trade those securities over the stock markets. Now, since the securities were initially offered by the company in the primary market, so they were new, but later on they are going to be traded over the stock market. The same securities are going to be traded over the stock markets. That's why they are not new securities. Now they have become old securities, or they are second hand securities. Why second hand? Because in primary market somebody has already subscribed them, somebody has already purchased them, and they have become the shareholders of that particular or the owners of those securities. Now when they are coming to the stock markets, so second hand dealing or second hand trading is going to be permitted. So second hand securities are basically traded over the stock markets. Now why it is said that listed securities are basically traded over the stock markets? Because as such, listing of security is not compulsory in nature, but when a company decide to trade its securities over the stock markets, then for the purpose of trading, listing becomes compulsory. If a company wishes that its securities must be traded over the stock market, then it has to go for listing. Why? Because listed securities are only permitted for the purpose of trading over the stock markets. So the complete definition of stock exchange is: a stock exchange is a recognized place which provides a platform for the trading of second hand listed securities. Now let us discuss regarding when the Government of India passed the Securities Contract Regulations Act, and when the stock markets were basically eligible for recognition, or when the first stock market was recognized as per the provisions of SCRA 1956. As I had already said that the Government of India passed SCRA, that is Securities Contract Regulations Act, in 1956, and the basic objective of behind passing this particular regulation was that after fulfilling the provisions which are stated under this particular regulation, the companies may be granted recognition of stock exchanges. That means only recognized stock exchanges were permitted to operate in our country, and recognition was granted to them by the central government to all those companies who were fulfilling the provisions which are stated under SCRA 1956. Now, the first stock market which was recognized after passing this particular act was BSE, that is Bombay Stock Exchange. It was basically recognized in the year 1957, but this particular stock market was established in the year 1875 itself. But let us discuss regarding the origin and history of stock exchanges in India. That means how the stock markets were established in our country and how the securities were initially floated by the companies in our stock markets. Now, in the 18th century, for the first time, East India Company floated its bonds and debts to the local merchants to raise resources or finance from the market. Now, it is said that for the first time, only loan capital or debt capital were issued by the East India Company. That particular company issued only loan capital. That means the debentures were issued or the bonds were issued by East India Company, and those securities were basically issued to the local merchants of India. As all of us knows that these loans or debts or bonds, they basically carry fixed rate of interest. So in the 18th century, East India Company, in order to raise capital from the market, in order to raise resources from the local merchants, they floated loan capitals to these merchants and taken a huge amount of resources or capital from them. So this was the first instance, but in the first instance only loan capital was basically issued in our markets. Now later on in 1830s, it is seen that basically equity capital were issued by large number of companies in order to raise resources from the market or in order to raise capital from the market. So equities were basically issued for the first time in our Indian financial markets during 1830s. Now, such kind of securities were basically issued in the region of Bombay, where the equities which were concerned with the banking companies or those companies which were dealing in the stocks related to the cotton, they were basically issued by large number of companies. So we can say that in the year 1830s or during that specified period, large number of equities were traded, but those equities were concerned with the stocks related with cotton and the stocks related with the banking companies. Now, further on, a major development happens during 1850. In 1850, for the first time, a regulatory or an act was passed in our country. The name of that act was Joint Stock Companies Act. It was passed in the year 1850, and the most important feature of that particular act was it permitted the companies to be established. Now, as by fulfilling the provisions of Joint Stock Companies Act, large number of companies or the companies, they were permitted to be established in our country. Now, an amendment was done in the Joint Stock Companies Act during 1860s. Now, as per the amendment which was done in this particular act in 1860, the concept of limited liability was introduced. Now, as per the concept of limited liability, whosoever is participating in the equity of the companies or whosoever is contributing towards the capital of a company, his or the contribution, as per the contribution of the shareholders, their liability was limited. That means their liability was limited to the extent of the contribution made by such shareholders in their respective company. Now, this particular act, that means Joint Stock Companies Act, which was passed in 1850, it was basically based on the English Companies Act 1844. So, on the basis of English Companies Act of 1844, Joint Stock Companies Act 1850 was passed, and after an amendment in 1860, the concept of limited liability was introduced in our financial markets. Now, because of the concept of limited liability, large number of investors, especially the high net worth individuals, they started making investments in our company. They started contributing in the equity. They started participating in the equity. Why? Because they were well known that whatever is their contribution, whatever is their ownership percentage, their liability is limited to that extent only. Now, later on in 1875, one of the major significant change or one of the major significant thing which happened, which is concerned with the origin and history of stock markets in our country, was that in 1875 the Native Shares and Stock Brokers Association was established in our country. This was the first stock market which was established in our country, and nowadays it is popularly known as Bombay Stock Exchange. Now, the Bombay Stock Exchange, which was established in 1875 under the name Native Shares and Stock Brokers Association, it was basically the first stock market of our country. It is also regarded as the first stock market of Asia, and it is also the 10th oldest stock market of the entire world. Now, at that point of time, that means during 1875, when the Native Shares and Stock Brokers Association was established, the admission fees for all the members, for all the brokers in that particular stock market was basically rupees 15. That means rupees 15 was charged from each and every member, whosoever is willing to become the member of that particular stock market. And rupees 1 in the form of annual membership fees was charged from each of the member. That means in order to renew their membership for another 1 year or another next following years, the members were supposed to pay an annual membership fees of rupees 1. Now, the total number of members till 1877 was increased up to 300, which was initially, that means in the year 1875, the number of members was around 200 to 250, but it increased up to 300 till 1877. Now it is extremely important to note down that the timing, there was no specified timing or working hour of the stock market, especially this Bombay Stock Exchange, during the period of 1875. It was seen that the trading started around 1 p.m. at the afternoon, and the trading lasted or it ended hardly within 2 to 3 hours. That means till 3 p.m. or till 4 p.m. the trading of a specified day, it comes to an end. Nowadays, we know that the trading basically started from 9 a.m. It is open for regular trading from 9:15 a.m. That means the retail investors that they can participate in the market on a frequent basis, on a regular basis from 9:15 a.m. onwards, and the trading continues till 3:30 p.m. But earlier, such kind of trading started from 1 p.m. and it hardly goes for 2 or 3 hours on a day-to-day basis. Now, in 1894, basically Ahmedabad Share and Stock Brokers Association was established. Now, let me discuss with all of you regarding how BSE was established, or in 1875, how the Native Shares and Stock Brokers Association it came into existence. It is said that the establishment of BSE in the year 1875, it is directly concerned with the American Civil War, which started during 1860. Now, in 1860, because of American Civil War, basically the American industries who used to take the cotton from the European countries. Why? Because the European countries, they used to supply good quality of cottons to the American industries. Now, because of the American Civil War, the European countries, they stopped the supply of cotton to the American industries. Now, in order to continue their production process, in order to carry on their industrial process, the American industries from 1860, they started accepting cotton from the Indian merchant. There were 6 to 12 merchants. They were basically brokers who were dealing in cottons. They basically started supplying cotton to the American industries during the period of 1860. Now, from 1860 to 1865, they used to supply cotton to the American industries. But in 1865, the American Civil War comes to an end. Now, because of the end of that particular Civil War, the American industries, they again started accepting good quality cotton from the European countries. So, the merchants of, or the Indian merchants who basically entered that field in 1860, they were basically, they remain idle, or they were not now demanded by the American industries. So, in 1865, they become idle. Now, those brokers, they makes an association, and this particular association was later on in 1875 registered in the form of Native Shares and Stock Brokers Association. So, from this particular, or from this particular American Civil War, we can say that our stock market, or the first stock market, it basically comes or came to an existence. It was more or less directly or indirectly, it was concerned with that particular scene, or because of the American Civil War, the traders which were inclined towards the supplying of cotton, they makes an association and they registered this particular body under the name Native Shares and Stock Brokers Association. Now, some of the important stock markets which were established after BSE, but prior to 1947, or you can say prior to 1992, that means prior to the establishment of SEBI, where some of the important stock markets were in 1894, the Ahmedabad Share and Stock Brokers Association was established in our country. In 1908, Calcutta Stock Exchange was established in our country. In 1920, the Madras Stock Exchange was established. Madras, nowadays it is known as Chennai. So, in Madras also, the Madras Stock Exchange was established in 1920. In 1934, Lahore Stock Exchange was established. All of us knows that India got independence in 1947. Prior to that, Pakistan and all the regions of Bangladesh, they were basically a part of our country. So, in 1934, the Lahore Stock Exchange was basically established in India itself. Now, in 1940, Uttar Pradesh Stock Exchange and the Nagpur Stock Exchange were established in our country. In 1941, the Hyderabad Stock Exchange was established in our country, and in 1947, Delhi Stock and Share Brokers Association was established in our country. Now, although large number of stock markets prior to 1947, large number of stock markets were established in our country, but it was seen that the trading in stocks remained restricted to a limited group of peoples only. That means the retail investors or the common people, they were not participating at large numbers in the stock markets. Now, the government of India, one of the main reason for not participating of large number of retail investor was perhaps that the stock markets, they were not regulated by any regulatory body. More or less those stock markets were regulated by the brokers themselves, or the association of brokers, or the association of persons of that respective stock market. But the government of India, after independence, it passed Capital Issues Control Act 1947. Now, the government made it very clear that as per the provisions which are specified under Capital Issues Control Act 1947, the stock markets which were operating in our country, they were going to be regulated. Now, after passing this act, a CCI office was established by the government, and the CCI office, that is Controller of Capital Issues Office, became the market regulatory body, and the CCI office used to operate as per the provisions which were stated under Capital Issues Control Act 1947. So, our Indian financial system, it basically got a regulatory body from 1947 onwards. Now, in 1956, the central government passed SCRA 1956, that is the Securities Contract Regulations Act 1956. What was the basic objective behind passing this particular SCRA 1956? The government clarifies under the provisions that from today onwards, that means from 1956 onwards, all the stock markets, they are going to be given, or they are going to be granted legal recognition if they will fulfill the provisions which are stated under SCRA 1956. So, all the companies who were basically trying to operate as a stock market in our country, they were supposed to fulfill the provisions which were stated under SCRA 1956. And after proper verification, if the central government was convinced, then only the central government used to grant legal recognition or recognition to such kind of companies, and thereafter they were permitted to operate in our stock market, in our financial markets, in the form of a stock exchange. Now, Bombay Stock Exchange was the first stock exchange who fulfills all the terms and conditions prescribed under SCRA in 1956, and BSE became the first stock market which basically was recognized under the provisions of SCRA in 1956. BSE was granted legal recognition in the year 1957. Now, in the year 1964, with the establishment of UTI, that is Unit Trust of India, all of us knows that the mutual fund started operating in our country from 1964 onwards with the establishment of UTI. Now, UTI or mutual fund, when they started trading in our stock market, they basically give a strong investor, a regular investor, or a basically DII investor, institutional investor in our stock markets. Now, in 1977, one of the major significant change which took place in our stock market was the Reliance Industries, RIL. It was basically listed as a company with the Bombay Stock Exchange. Now, when Reliance was basically entered, or when it was listed over the stock market, then large number of retail investors, they started participating in our stock markets. It basically boosted the confidence of the retail investors, and they started participating in Indian stock exchanges. In 1986, the Bombay Stock Exchange, it basically launched Sensex, that is BSE Sensex. It was launched in the year 1986. Now, Sensex was basically displaying an index of the top 30 stocks or the top 30 companies which were listed over the Bombay Stock Exchange. Their indexing was done. The base year was basically taken in the form of 1978-79, and the base index value was taken as 100. So Sensex was basically floated in the year 1986, and till date it is one of the most popular index which is prepared and displayed by any of the recognized stock markets in our country. Now in 1988, the Government of India established SEBI, that is Securities and Exchange Board of India, as an interim administrative body. But at that point of time, that means in 1988, it was merely an interim administrative body which was directly working under the Ministry of Finance, that is Government of India. Now, in 1990, OTCEI was established. Now, we will discuss in detail about OTCEI in the later videos. In 1991-1992, basically the stock market was crashed by 54%. Why? Because of Harshad Mehta scandal. Now, in 1991-92, Harshad Mehta scandal happened. Also, large number of complaints were regularly filed by large number of investors against the regulatory body of that particular point of time. That means the CCI. So, the Government of India finally in 1992 abolished CCI office by repealing the Controller of Capital Issues Act 1947. So, the Controller of Capital Issues Act 1947 was repealed by the government, and CCI office was abolished, and SEBI Act 1992 was passed in the year 1992, and from 1992 onwards SEBI became the market regulatory body. Now, NSE was also established in 1992, but it started functioning as a stock market in our financial markets from 1994. Now, let us discuss in very brief regarding the important features which were concerned with the old stock markets. Nowadays, such features can't be seen, but the important features which were associated with the old stock exchanges were: point number one, association of persons. That means earlier the stock markets were basically categorized under, or they were basically a kind of association of persons. Yes, those persons were basically the brokers, mostly of the persons, or mostly the persons who used to associate together, they were brokers. Basically, there were two kinds of stock markets in our country, and those two broad categories were: number one, voluntary association of persons. For example, Bombay Stock Exchange, which was initially established in 1875, it was basically a voluntary association of person type of stock market. And the second important category was companies guaranteed or limited by guarantee. Some of the stock markets which were established in the form of companies limited by guarantee were Hyderabad Stock Exchange or Madras Stock Exchange. But overall, the important feature was that all the stock markets, they were basically a kind of association of persons. Now, the second important feature is entry to new member was more or less restricted. That means a new member was only permitted if the existing members or if the existing brokers, they granted permission for the entry of member. Otherwise, the entry of member was restricted. Point number third, or feature number third, is physical form of securities were traded. That means earlier demat trading was not permitted, only physical form of securities were traded. Now, the fourth important feature is open outcry system. Earlier, the trading was done in an open area, and the traders, they used to shout very loudly the prices of the securities and the number of securities which were floated by the companies. They used to shout in a very loud manner, and it seems that they were crying. That's why that methodology of trading was basically regarded as open outcry system. The next important feature is no strict rules and regulations. Now, prior to 1947, there was no regulatory body. All the stock markets, they were basically governed by the brokers themselves. So, there were no strict rules and regulations. Although after the establishment of CCI office in 1947, then also there were no strict rules and regulations. More or less, the regulations were opaque in nature. They were not transparent, which is our next feature. That means lack of transparency. The rules and regulations, they were not transparent. And oftenly, the brokers, they used to manipulate the rules and regulations as per their likings or as per their suitability. Now, the trading was permitted only in lots. That means single trading or trading in a single share was not permitted earlier. And the last important feature is longer settlement cycle. Even T plus 7, here T basically means trading day. That means a settlement of trade or a settlement of security used to happen after at least 7 days. That means the day on which the trading was executed, after 7 days those stocks were basically settled. Now, in my next video, I will be discussing with all of you regarding the organization of stock exchanges. Now, in that particular video, I will be dealing with, or I will be discussing with all of you regarding what are the different organizations of stock exchanges in our country, what are the different segments of stock market, that means what are the different segments of all the stock exchanges, and what is the current scenario. So, very thanks to all of you for watching this video.